Fantom has gone from $3 down to under 30 cents in the space of just a few months. But we projected this in advance. When you can read the markets with Elliott waves, you can see what's likely to occur 2 steps before they actually occur. So today we're going to do a bit of analysis, do a comparison on why we thought it was going to happen and how it unfolded, but also what should be happening next based on the psychological mood of the price action. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. Let's dive straight in. All right, Fantom. This particular video we did on, February 3rd, 2022. Attention Fantom holders, what to expect as the crypto market is in fear. And in this video, we covered it pretty clearly. Now, we were bang on point with Fantom, right? And I say bang on point, not to brag, but more just that it's probabilities, never certainties. But when we see a 5-wave structure as clean as this, very clean structure, we said, look, likely to be a top over here. And it topped. We were projecting it over here, made one little more high over here, and then boom. And then we said later on, which is this video, we should anticipate a 3-legged correction, right? That's typically what happens with most markets. And this is before the correction occurred. It was only the first leg down that we said with Fantom. Now, let's just have a quick look at what happened, right? So this is what we were projecting, something like this. All right, well, the correction has just unfolded. Now, it's gotten a lot deeper down here, right? And the leg up, this part wasn't so strong. But you can see that the pattern, the structure was there, and you can anticipate these in advance. So today what we're really gonna focus on is, we got this nice 5-wave structure. One, if we can get this here. 1, 2, 3, 4, 5. That's the bullish movement to the upside. But after a 5-wave structure, we should always anticipate a 3-legged correction. It's not that clean. We would normally anticipate this to be a bit more to the upside, like we saw with Ethereum, but you can see it's gone right away down. So we're going to look at this in a bit of depth. I drew these 2 lines as well. You will see this in the YouTube video, these 2 lines. This was a bit of time analysis. This just said, this is the likelihood, the time, and the price that is likely that Fantom will get down. And we said in between late May to early July was this zone over here. That was the projection in advance, just so we got an indicative feel of what's likely to occur. And as we can see, we've smashed through the lower price boundary, which is this red line, but we haven't reached the first typical time, which is the end of May. But we've got enough information to, make some conclusions over here to see what's happening. Because I do remember, it feels like it was yesterday that we were doing this video here. I think I can't remember exactly how I said it, but it was. Or should we have a look? We'll have a look, actually. Should we have a look? Let's go to, I'm just going to find it over here. If I can find it. Sorry, this is Ethereum. Here we go. I think I got it here. No, it's not that one. Let me just have a look. Let me just see. It'll be worth looking at this if this is that's not the video. We won't worry about it for now. Yeah, the main thing I was going to just show you and focus on is, there's patterns for an end of wave 5, but now we want to focus on the patterns for end of wave 2. So I'm going to jump into my Fibonacci and Elliott wave course. You may have this course. Jump into the Fibonacci section and lesson 2, Fibonacci retracements, right? So there's a couple of things with this that we want to be aware of. I'm just going to show you the basics. I'm going to go over here. Let's just go over here. Okay, so when we're looking at this is like the typical wave 2 theory, right? You got to move to the upside, we call it a wave 1, and then we have a correction, right? Normally happens in 3 waves, more often than not always, but more often than not. And then the wave 2 low is actually a retest of the wave 1, but it often acts as a launch pad for wave 3, right? And that's what we're looking like we're seeing with Fantom. Now, with Fantom, however, the correction is deeper than the typical maximum. The typical maximum is this 78.6%, which is around 74 cents in the framework of Fantom. But we are now down to 30, we've been as low as pretty much 30 cents, right? 30 cents, thereabouts, which is pretty extreme in this range. So, but it looks like we're coming towards the end. So there's two ways of looking at this. You can either, take a punt, and hope for the best kind of thing, which has pros and cons. But what we can do, I'm going to do two things here. Just looking at this is relatively high level, but you'll get the picture. This over here we would consider as a wave A. This over here, not the cleanest wave B, but a wave B, and then this a wave C. And that's how you look at it. Now, wave C's more often than not break down into 5 waves. And the question that I ask myself is, can I see 5 waves within this structure? And is it quite clear? It is pretty clear. I'm just going to go into a lower time frame. I'm going to go into the 4-hour chart. I'm going to change it to a line chart just so it's a bit cleaner. And again, I'm just going to look at this, and this will make sense to you as I do this. Do you see any particular wave count? Well, to me, I see it, and it's pretty clear on the daily as well. I'm going to jump back into the daily in just a second. But it looks like a nice wave 1, A, B, C of a wave 2, a wave 3, a wave 4, and a wave 5. And that's a real big clue for us, massive clue for Fantom. And it allows a really particular clean trading strategy. I'm just going to get rid of this. That's no use to us right now. A nice clean trading strategy with high probability for Fantom, right? So what we're going to look at is this micro degree count of this wave. Well, it's not micro, it's really more like an intermediate. Here it looks like a nice wave 1, a wave 2, wave 3, a wave 4, and a wave 5. We'll keep it as an intermediate. We'll keep it intermediate. And it's of a wave C. So it's a 5-wave structure of a wave, well, it looks like a potential wave C of a wave 2. Let me just grab this wave 2. And the question mark is still there because it hasn't been confirmed yet. Really, the first signal to confirm would be a break above this high, but more convincing would be the price going above this high. Right? So when we're looking at this now, with this 5-wave structure, we can use this information because there's such a thing called an end of a 5th wave price target. I'm just going to show you this. There's method behind the madness, right? Method behind the madness. We don't just don't draw out random lines. I'm just going to look at price extensions less than 17 for end of wave 5. Right? This is in my Fibonacci course. It's only £97, cheapest ships. If you take my Anyway Fibonacci Masterclass, you like it, you can get the course. But it just talks about the end of wave 5 price targets, right? And it gives us these particular ratios. I cover it really, really clearly in the course. But here I cover it for the upside. But what we're going to do is do it from the downside. Same applies, but we're just going to reverse it. So now what we're going to look at is the main one. I'm just going to keep it quite simple. We're going to measure wave 1 to 3, projected from 4. And there's 3 ratios, but there's 2 main ones that I want to focus on. It's 38, 62, and 100%. Right, 100% is likely to be outside of that range, so that's not so relevant. But these two are so relevant. You can see that we're in that zone now. So based on this gives us a good signal that Fantom has potentially hit its low and the end of a correction. However, the way you should think about this, because there's probabilities and never certainties, is you want to go with the case that you're wrong. Because we haven't hit the minimum time. That's something to take into account. So, but what we should anticipate, the question how I view this is, okay, if we're buying today, what would be the minimum that Fantom would do if we're wrong in this position? Well, after a 5-wave sequence, the absolute minimum typical is a movement to the upside as a correction in 3 waves. I'm getting a bit advanced here, but I'll cover it anyway. So let's just say this is the low over here. We would anticipate that Fantom will, as a minimum, get to $1 to $1.30, right? So there's like a 3x. So that's a good chance of getting risk-free. But a safer strategy, a much safer strategy, is wait for the price to exceed the last major swing high, wait for a correction of some sort, and then go long on the next swing high with a stop loss below the last swing low. So then it's more highly probable that you can get risk-free and do something like this. I got a bit detailed there. That's not what I was planning on for today. But the main thing to finish on with Fantom is if we do finish off the correction, what is the likelihood of what's Fantom going to do next? Well, if this is a wave 1 and a wave 2, well, what will follow typical is a wave 3. If this is a wave 1 and if this is a wave 2, typical next would be a wave 3, right? A wave 3, a continuation of the former trend. So if we just do a couple of basic wave 3 projections, I cover this in my course. I even cover it in the masterclass actually. I cover this wave 3 projections and the two ratios for most wave 3s. The most typical common is 1.618 to 2.618. 2.618 is overextended. It's crypto. So crypto often is overextended. So we're talking about $5.70 to $9 in Fantom, right? What's that? That's a 3 times 10. That's like a 30x up here. And over here is, what's that? Times, this is like a 20x here. So there's massive movement potential to the upside. This is pure technicals. I'm not looking at fundamentals. I'm not looking at roadmap, tokenomics. I'm not looking at any. I'm just looking at past buying and selling behavior of the mass herd psychology of everyone that's speculating in Fantom. And you also want to remember we're in early stages of crypto, and most of the crypto movements in price is not because of utility. It's not because of the utility of the token. What do you care about? What about gas? What about this? What about that? What about staking? What about, yeah, that's all relevant. But 90%, maybe even more, of the price movement is down to speculation. Because you can see that clearly, right? Even just think about it logically, right? If you want to argue this, fundamentals versus technicals, is this price movement to the downside. What causes that? Just from a mathematical, logical, just actual, facts perspective. Well, it's selling, right? It could also be the issuance of loads of new tokens, but that's not the case. I know that's not the case. It's selling pressure, which drives the price down. All right, well, is it any case where Fantom has lost that much utility from $3 down to $30, 90% of utility, or 99% of utility? I go, no, it's just pure selling. So when we know that and understand that, we can ignore the news. I mean, literally ignore the news. No value in the news whatsoever other than fear, uncertainty, and doubt and confusion. And we can just look at this and go, all right, 50 to 70% of the time, these chart patterns are going to be clear. And this doesn't get much clearer than this. Okay, this part of the correction is not, the best. This part here, you normally anticipate to be a bit more on the upside, but this 5-wave sequence, just as clear as it gets, Just for anyone that's done Elliott wave, this is like obvious stuff, because when you saw my video when I was talking about this high, it's time to take profits. That's what I was saying with Fantom. Okay, it made one more little high, and then we're just anticipating this well ahead of time. And you should be anticipating these kind of movements well ahead of time. So if you're up here, first of all, you should not be buying. People asking me, should I buy Fantom here? It looks so bullish. And I go, no, it's profit taking time. Why? Because the smart money is looking to take profits. What happens when you take profits? And everyone takes profits. Well, this happens. All right. When everyone's now panicking and saying, should I sell my Fantom? I'm down. I'm going, look, we're looking like we're coming towards the end of a correction. So you're going to be waiting for the impulsive move to the upside. So there you go. That was pretty detailed today, but if you like what you saw today, take my free Elliott Wave Fibonacci Masterclass. You'll click on this link. It'll show you free Elliott Wave Fibonacci Masterclass. The link's in the description. It'll take you straight to this page. Elliott Wave Fibonacci Masterclass, how to read the markets like a pro. You'll get some phenomenal information on wave 2, wave 2s, wave 3s, end of wave 5s, and some of the key ratios that you really want to be aware of. All right, so if you like today's content, like, subscribe, hit the bell notification. Now, even though it doesn't feel like it, like it feels like the fat lady is singing, I go, no, she's not singing. This is warm-up phase. This is what we're waiting for. This is the correction. I've been waiting for this since November. So that's 6 months of patience we've been anticipating this correction. And it looks like with Bitcoin and with Ethereum and with Fantom, we're coming towards the end of a major correction, right? If that's the case, that means the buyers are getting ready. They're getting warmed up, the bulls and the bears. And what we're looking for is an overbalance of price, which means buying behavior, a correction, and then a continuation. If that occurs, it's probably going to be one of the key biggest bull cycles that we've seen, and the end, the second half of 2022, we're going to be aware of that, very, very aware of that. So the game's not over. In fact, it looks like it's just the very beginning. And, it might not happen tomorrow, so it might require patience. But the second half of 2022 is likely to be very, very bullish. And we are also in the very beginning of this multi-decade long trillion-dollar trend called crypto and blockchain, with smart contracts, with serious utility, which is going to really revolutionize a lot of things in the world. All right, let's finish on a quote. Let's wrap it up, Jagir, wrap it up. Okay, I will wrap it up. All right, let's go. Chapter 2 today. It's Warren Buffett. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Now, when you're trading and speculating, taking a loss is just the cost of doing business when it comes to the business of trading. So we want to minimize the probability of losses and maximize the probability of gains. So have a plan. It was said by one of my mentors, actually, he told me this when I was like 25, 23, 25, a little while ago. He said, look, Jagir, having a trade plan, which is like a business plan for your trades, does not guarantee success, but the lack of one does guarantee failure. So if you even haven't got a simple bullet point plan of when you're going to become risk-free, whether it's a 3x or a 4x or a 2x or whatever it is, then you've already lost. Get your plan into play, anticipate, prepare, because it's all about when anticipation meets the opportunity, bam, you can act and leverage. All right, like, subscribe, hit the bell notification, take the masterclass, and I'll see you very soon.